All right, I have another technical indicator I want to show you guys today. This one's really, really great. This is probably my favorite one I've ever found, and it's ATR Rope by Sam Riccio. This is the one I use all the time. So if I open that up, you'll see the default settings look like this. We get an ATR. This line is the ATR of the candle closes. So it's giving you the average true range of the candle closes, and then it has these consolidation ranges that it's showing you. Using these default settings, I actually don't use these default settings, so I'm just going to cover this lightly. But the basic idea is that when you get this kind of consolidation happening, these blue lines indicate some mathematical calculation of a consolidation range, and when it breaks out of there and starts closing outside of that consolidation range, then you maybe would expect to move that same direction. And then it establishes a new consolidation range, and this candle closes above it, so you'd expect to move up, and so on and so forth. I don't personally use it like this, but that's the basic idea, I think, of how that would work. I haven't looked into it too much, and maybe that's worth looking at. I'm on the 1 minute candles right now, so you can see the 1 minute candles don't respect technical indicators as well as larger time frames do, and that makes sense. If you look at the volume of each candle, this is on the MNQ, but in any 1 minute time frame, like 2,000 volume, 5,000 volume, 1,000 volume, and this is during the New York session. If you go to before the session opens, we're in the hundreds. If you go to the middle of the night, the amount of volume you have is really low, like 200, 400, 300. Sometimes you get down, 87. You get down in the double digits. So what that means is there's not a lot of people trading at this time. And in any 1 minute period, if you only have 100 volume, then anybody with a little bit of capital could come in and buy 500 shares or contracts. We're doing futures right now. And that would create these huge, like, right here is a perfect example. Suddenly you have someone come in and buy 1,000 contracts instead of 100, 200, and it looks like this huge move compared to these smaller moves. But that doesn't mean there's a lot of people involved. That could be one person buying 1,000 contracts if they have enough capital. And so it can really skew the graph. So when on these shorter time frames, it's easier for some, like one person or one group of people, some overzealous bull or overzealous bear, to come in and mess things up. So you have this awesome consolidation range, and then somebody comes in and pushes it down. Does that actually mean anything? On these smaller time frames, not really. On a larger time frame, it's harder to do that. It's harder to push the entire market around. So on an hour time frame, the amount of volume you get on any candle, this is in the middle of the night again, but 15,000, 13,000, 11,000. It's harder to abuse that, right? And then during the New York session, if we open up 94,000, 184,000, 174,000, right? So the volume's just so much bigger. It's harder to push the market around in a weird way. And so the technical indicators tend to hold true a little better on higher time frames. But just to show you how this indicator works, I'm going to look at a lower time frame just to show you a few things about how this works. So okay, we've talked about the default settings. Let's talk about how I use this. Instead of going as your source on the close, we actually want to hide the consolidation range and show the ATR channel. And then we're actually going to use this indicator twice. So we're going to have the first one show the high. So we're going to have the ATR on the high of the candles. And we're going to hide the lower line. And then we're actually going to pull up a second ATR rope indicator and have this one be on the low of the candles, hide the consolidation range, show the ATR channel, hide the upper line. Okay, let's go over that one more time. You have a high and you have a low. And if I hide this, the high is the ATR of the highs of the candles, and that's this thicker line. And then we're also showing the upper bounds, the absolute highest these candles go. And you'll notice that when the candles go high, the upper bound follows it. So this upper bound will always encapsulate the upper wicks. And then this thicker line is the ATR of the candle highs. And then same thing on the lows. We're going to show the ATR of the candle lows, which is this thicker line, and then the lower bounds. Okay, and the settings to do that, you put one of your sources as high, and on both of them, you're going to hide the consolidation range and show the ATR channel. And on the one that has the source of high, you're going to show the rope and the upper limit. And on the one that has the source of the low, you're going to show the rope and the lower limit. Okay, I keep all of the ATR length and the multiplier the same, but this is the basic setup. Now, one thing I want to point out is that these lines, there's 4 lines now, and you can look at this as having 3 channels. You have your upper channel, your middle channel, your lower channel. And just at a first glance, you'll notice that when there's upward movement, the candles stick to the upper channel. And when there's downwards movement, the candles stick to the lower channel, and the pullbacks will sometimes go into the middle here. We're going to look at that a little bit more on the higher time frame, but first I just want to talk about how this indicator functions. And so this line is green. It's calculating it in real time, but if this candle keeps dropping, we might see these lines change colors. So the line from this candle to this candle is calculated in real time, and so it's not set in stone until this last candle closes. Meaning, it wasn't until this candle closed that this line would have for sure been green. Okay, so thinking, you know, if you see one of these moves and you say, oh, well, as soon as this line turns green, I would get in on this candle close. What I'm trying to point out is that that line doesn't turn green until this candle closes. And this upper line didn't turn green until this candle closes. So those big moves, sometimes you think, oh, well, if I just get in on this candle close, when the line turns green, I could catch this big move. And I'm saying that you'd miss it because that line doesn't, this segment doesn't turn green until this candle closes. It's important to know how the indicator works so that when we're back testing, we can back test properly. Okay, so now that we've seen kind of how this works, let's talk about one more concept. All price action is supply and demand. So if you have a bunch of people trying to buy and not very many people trying to sell, then price is going to go up. If you have 10,000 people trying to buy and only 1,000 people trying to sell, you're going to have 1,000 people, 1,000 buyers and 1,000 sellers make an agreement, and then you have 9,000 buyers still trying to buy, but there's nobody selling. And so what happens is the price goes up until they can find people who are willing to sell at a higher price. And so when the price stops going up, that means you found some kind of balance where there was enough buyers and sellers that the price stopped moving. And in fact, the price is so high now that now there's more people trying to sell than buy. And so the price starts going the other way. So as these lines change colors, this is my mental model. You can think of this however you want, but you'll notice that sometimes the colors are different. So right here's a good example. The bottom lines are red and the top lines are blue. What would cause that? Same thing here. The bottom lines turn green and the top lines are blue. Happens again over here. Okay? So my mental model is you get this price action down, and then down here, the price is low enough that a bunch of people start stepping in to buy. They think, oh, what a bargain. It's low. Let's buy right now, and then it'll go up. And so the bottom channel represents buyer sentiment to me. The color of these two bottom lines represents buyer sentiment. Okay? So when the price goes down low enough, then you're going to have buyers start to step in and stay. It's low enough, we're going to start stepping in and buying things. And so when the bottom lines turn red, that's the buyers saying, this might head down more. And when the bottom lines turn green, that's indication that the buyers are ready to push for something higher. Now it's hard to see on this, the 1 minute, like I said, it's really fickle, moves around a lot, so it's hard to see here. Let's look at one of these examples, and then we'll go to a higher time frame and everything will be a little bit, stick to the mental model a little bit better. So you have all 4 lines are red, okay, and then when this candle closes, the bottom lines have turned blue. To me, that's the buyers saying, we're stepping in and we're going to push this up. The top lines are still red because it hasn't gone up very high. So you'll notice that the lows of the candles have come up considerably. It takes less What am I trying to say? There's enough people stepping in to buy that these lows are not dropping considerably anymore. You'll notice that the highs of these two candles are pretty close to each other. The sellers have not allowed it to go up past this point yet. There's still a bunch of people willing to sell at this level, and you can see that that happens here. It doesn't push above this level for a bit. Once it does, that means we've pushed past whatever wall of sellers was here. We've soaked up all of the people willing to sell, but there's still people trying to buy, which means what? We push past this consolidation point and we seek higher price points until we find more sellers. And you'll notice that these two lines change to blue in response. We've pushed past this seller wall, and so the sellers have given up this price point, and so it's moving up, and the lines turn blue in response. So the upper lines represent seller sentiment, the color of the two upper lines, and the color of the two bottom lines represent buyer sentiment. So right here, so it was all down. Everyone thought the price was going to go down. Lines were all red, and then here we see the lines turn blue because buyers have decided that's low enough, we're going to start pushing. And we don't see it push back down past that point because the buyers have decided it's not going to go lower. And then here the sellers agree and it starts going up. And then we have it turn green here because this is a trailing indicator. So the price action happens, and then the lines change colors to indicate what's been going on. So the line color is just a secondary way of looking at the lows and the highs of these candles. Okay, but it can be a good indication of future sentiment as well, which in this case you see totally happened and it kept going up. Okay, so we've talked about the colors of the lines. We've talked about how there's 3 channels. Let's go to a higher time frame where things really stick to these patterns really well. So on the 1 hour, it's harder for one overzealous person to come in and push the graph around. And so when you see big moves, it actually usually does mean something. Right here, for instance, you'll see this is a 7 a.m. candle, which means this includes the New York session open. I'm on UTC -6, so for me, the New York session opens at 7:30 a.m. So the 7 o'clock candle is 7 a.m. to 8 a.m., which includes the New York session. So suddenly you have a ton of volume, ton of momentum, and you see these big candles. And anytime you see a big candle, you can come look at it and say, what happened here? This is a 6 p.m. I actually don't know what happened there. Anyways, I'm getting off track a little bit. Let's talk about the indicator. So we have, let me find right now. Okay, this is where we're at right now. So you'll notice that on the downward move, there's a lot of red. The ATR ropes turn red, and then on the upward move, they turn green. Okay, this is really, really helpful visually. As soon as these lines turn red, you can expect downward momentum, and sure enough, it does. When they turn green, you can expect upward momentum. A little bit of a counter example here. It doesn't really go anywhere. You actually get starts going down again, it turns red again, and then it goes green again, and you get a big move up. Now, this is a good example of what I was talking about earlier, where if you say, oh, I'm going to get in on this candle close and catch this green move, and it's like, well, you actually miss it. If you get in when the buyer's line turns green, then you can catch this huge move. But by the time the seller line turns green, it doesn't happen until this candle closes, and you missed that huge move. Okay, so let's talk about this a little bit. So a couple things that stand out to me, a couple patterns that I've noticed that are really, really helpful. You'll notice that the candle, you have to pay attention to where the candles close in relation to these 3 channels. So starting right here, you have all this blue, which means there's some serious consolidation happening. Nobody knows which direction it's going to go. And then by the time this candle closes, the buyer line has turned green. Buyers are trying to push up, which to me means there's a lot of people willing to buy. And so we shouldn't really see it. The lows of the candles shouldn't come back down too much, and they don't. You'll see that the low of this candle and the low of these candles is close. There's a little bit of movement, but the candles are not closing outside of this. It moves into the top channel, and this line turns green. That means buyers are willing to set up some kind of wall here where they'll soak up pressure. So as the candles come down into this area, we see a bunch of buy pressure soaking up this pressure, and the price action doesn't move down back out of this top channel. And as a result, we get movement upwards, and the sellers eventually concede, and we get movement upwards. Interestingly, this happens sometimes. the seller line turns green because we had this huge price action. Then the candle closes down here, which is a good chance to get in. All 4 lines have turned green, and you could get in and ride a big move up. The only risk here being that this actually did close outside the top channel. It closed in the middle channel, which could be an indication that the move is over. And you could look at this move and say, oh, the move's over, it's going to start heading down. So that's, who knows what it's going to do. All you can do is look at the indicators and outside pressures, the fundamental pressures of price action, and try and figure out what a good bet will be. But in this case, this is one of those instances where all the lines finally turned green and it went the other way, and so you could actually get in a good price point and ride this move up. Now, a couple things to notice. When the market is moving up, you'll notice that the candles stick to the upper channel with some consolidation that goes into the middle channel. And then once the candles start closing in the bottom channel, to me, that's an indication that the move is over, the upwards move is over, and we're actually going to start seeing downwards moves now. And you'll see that sure enough, it moves down. As it moves down, it tends to close in the bottom channel with pullbacks into the middle channel, and then close in the bottom channel, still downwards momentum, pullbacks into the middle channel. This is quite a few candles in the middle, which would make me nervous to keep riding it downwards. But then it starts closing in the bottom channel again. You could get back in, and it moves down, and you'll see the candles follow the bottom channel. Close in the middle, close in the middle, close in the bottom. And you could say, oh, it's going to keep going down, and you get in, and you're wrong. So you have to set up wise exit points. But the downwards momentum, tends to stick to the bottom and middle channels. And then once it starts closing in the upper channel, to me, that says this huge downwards move is over. We had this big downwards move that was mostly in the bottom and middle channels. Now we start closing in the upper channel. That means the downwards move is over, and we can start expecting upwards moves now. So we start closing in the upper channel, the lines turn green, and we start getting this upward move. Okay, now during this upward move, we've had consolidations into the middle channel, but we're mostly in the upper channel. So to me, we're still we have upwards sentiment. A lot of the lines are green, or here you have some blue lines when there's this consolidation, but now they're back to being green. So we have an upwards move happening right now. We're on a 1 hour time frame, which means it's harder for people to accidentally mess up the trends. We do have the buyer line turning blue here, which to me means that there's not as many buyers ready to soak up pressure here. And so if we get a bunch of sellers starting to sell, it could push down. But we're still in the upper channel. So my current bias would be a long bias. I'm bullish on this. And yeah, so you could look at some back testing and try and develop a specific strategy around this. One idea would be to wait for it to close in a bottom channel and go short. And you kind of just ride it until it goes, you could ride it until it goes blue and you make a little bit of money here. You could ride it until it closes in an upper channel, and you basically got in on this candle around 23,600, and you'd get out on this candle around 23,200, and then you'd go long until it closes in the lower channel. I haven't done the work to back test this. I probably will though, because this is really, really interesting to me. This is a momentum indicator, which means that when you get momentum, when you get these big moves, it works really well. You make a ton of money, right? You make a ton of money here. When it's going sideways, it's turning, red, blue, green, blue, red, and it's not going anywhere. And so you'd lose money on the sideways days, and you'd make money on the days or weeks where it has a lot of momentum. I haven't done the back testing yet, so I don't have a good strategy on this, but visually, I think this is a really good way to get bias on the market. And you can say, because on the hour time frame, if everything's green, like right now, that's a good indication that we have an upwards bias. And of course, we do have some of the lines are turning blue right now, so I guess we'll see what happens. But that's the indicator. I think it's a lot of fun. It's very easy to just visually see which way the market's leaning, And you could use this on your lower time frame trades as well, where you could come to the 1 hour or the 1 day and get a bias of where the market's headed, and then get on your lower time frames. And maybe you're only taking long trades right now because of the hour-long bias. There's so many cool things. I'm gonna do multiple videos on this this indicator compared with other indicators, because this is just an introduction to this indicator. But when you start coupling this with other indicators, you get some really, really interesting things happening. So I wanted to introduce this in its own video so that we can see it, and then I'll show how it interacts with other indicators in a future video. One really good one, just to this VWAP deviation. When you use the ATR rope and the VWAP deviation, you can use the VWAP deviation as the source of the ATR rope, and then you can look at the different time frames, and it's fascinating. I'm gonna save it for another video, because otherwise this video will be way too long. But anyways, that's what I have for you today. Hope you enjoyed it. If you liked the video, hit the like button, and if you want to see more of my videos as they come out, go ahead and subscribe. Leave any questions or comments you have in the comment section, and thanks for watching. We'll see ya.